So the incidence of tax, the scope of total income of an assessee depends upon the following three important consideration. What are the three important consideration? First and foremost thing is the residential status of assessee. That is whether the assessee is a resident and ordinary resident, or whether the assessee is a not ordinary resident, or whether assessee is a non-resident. We have to see, because he is liable to pay based on his status only. Certain incomes is not taxable for non-resident, certain incomes is not taxable for resident and not ordinary resident, and some all the incomes are taxable for resident and ordinary resident. Okay, so next, second consideration, what is the place of accrual, the place where it is happening, or the receipt of income, on what where we are deriving our income, where we are receiving our income, that matters. And the point of time at which the income had accrued, the point, which place as the income is accrued. So when it comes to income here, when it comes to incidence of taxes, we have to categorize the income into two categories, that is foreign income and Indian income. Okay, foreign income and Indian income. So what is that foreign income? Foreign income is nothing but it is an income or the work whichever the work has done outside India, and the amount is also whatever we received outside India, that is called foreign income. Indian income is nothing but it's an income which is derived in India, or a receipt of income which is derived in India, that is only known as Indian income. Or the work is done in the foreign but income is received in India, that also considered as an Indian income only. If India is involved in any transaction, suppose Mr. X, he is doing a business in USA and is got on in India, and he sold a goods in India. Okay, so that time what it happens, how it impacts is the incidence, whatever Mr. X earns through this transaction, he needs to pay to the income will be called as Indian income. Why? Because the transaction is happened in India. If India is involved in any place, either in the form of place or in the form of income, or in the form of revenue earnings, then that income will be called as Indian income. Where there is no involvement of India, the everything, the transaction as well as the work also outside India, and the amount also if you're receiving outside India, that such kind of income is only called as foreign income. So here income is an important concept what we want to know. Okay, what we have to know here. Okay, next, Indian income and foreign income and income deemed to be received in India, certain which is discussed under section 7. Okay, so incomes, certain income which is deemed to be received in India. Okay, so Indian income, any of the following three Indian incomes, that is, if income is received in these three conditions only, the income will be called as Indian income. What are the three conditions? That is, if an income is received in India during previous year, or received or deemed to be received. What do you mean by deemed to be received? What do you mean by deemed to be received? You can unmute yourself. People, sir, they can unmute themselves. No, sir?
Yes, sir. Yes, sir. They can unmute.
Yeah.
Yet to be received, sir.
Yet to be received? Yet to be received or? Okay.
Supposed to receive.
Supposed to receive. Very good. Very good. So such kind of income we can consider as an Indian income during the previous year. That is also very clear. During the previous year, and the same time it accrues or the arise or is deemed to accrue or arise during 1 minute. Okay. Deemed to be received in India, accrues or arise, is deemed to be accrues or arise in India during previous year. So such kind of incomes will called Indian income. It is whether the work is done, whether work also, work and receiving portion, the income whatever we receiving, that matters. This work is also received in India, the work is also happened in India, the income is also received in India, then it is called as the Indian income. Or The work could be will be done in India, and the income also will be received in India. Such income will be called as Indian income. Next, if income is received in India during previous year, but it accrues or arise outside India. So what is that arise outside India? Suppose income, whatever income I am receiving here in India, okay, income we are receiving in India, but work will be done outside India. Such income is also called as Indian income. For an example, as I said last case, Mr. X, okay, Mr. X, he done a transaction with USA, okay, the work, the supply of everything, he supplied a goods in USA, but the income he received in India. So here India is involved, right? So that's the reason it is called as Indian income. It is called as Indian income. Okay. Any doubts? Any doubts?
Can you explain this again?
You want me to explain the second point again?
Yes, sir.
Yes. Okay. 1 minute. The first point explanation only I am telling. The work is also done in India, and the amount received is also in India. Okay. So that is the reason it is an Indian income. Same case when it comes to second case, what it says, the work is done outside India. Okay. Outside India, and the amount whatever they are receiving, it is in India. Okay. So such kind of income is also called as Indian income. That is what it means. Okay, that is what it means. Am I clear, sir? For an example, Mr. X. Okay, Mr. X. Okay, he is supplying a goods in USA. He's supplying a goods in USA, but that income he is received in India. That income, whatever he received in India, so that will be taxable under Indian income only. That income will be considered as a Indian income. Okay, am I clear? Am I
Yes,
clear?
sir. Yes, sir.
Here transaction is happened, but the income received in India only for Mr. X. Okay, in India only he received. So that's the reason it is a Indian income. That is what it is saying. The point is saying. Okay. In the next case, if income received outside India, but it is accrues or arise, or it deemed to be arise in India during work during the previous year. So what it means, it's just a reversal of this. Here we received income here in India, and the work is done outside India. But when it comes to here, so work is done inside in India, work is done in India, okay, and income is received in outside India. So such kind of transaction is also called as Indian income only. Such kind of transaction is also called as Indian income only. Okay. Am I clear with the Indian income? Any doubts? Any doubts?
No, sir.
Shall I proceed?
Yes, sir.
No. Okay. So this is what Indian income. Okay. Next is a foreign income. When a income is considered as a foreign income, if the following conditions are satisfied, then such income is foreign income. What is that following condition? Income not received or not deemed to be received in India. So where income and work both also outside India, So such kind of transaction will be called as foreign income. And the second condition, what it says, income does not accrue, income does not accrue or arise, or does not deem to be arise or in India. So what it says, both the income as well as work, both if it is not done in India, then such kind of income is called foreign income. For an example, Mr. X, okay, he supplied a goods in USA and he received money in China. Okay, so both is happened in outside India only, right? Both it is happened in outside India. So this transaction is called foreign income. Okay, am I clear? Am I clear? Any doubts? Yes or no? You can put it in the chat. Today chat box is empty. Just need some messages. Put in the chat. Am I clear? Any doubts? Shall I proceed?
Yes, sir.
Response.
Yes, sir.
Very good. 3 of them only are awake in the class now, right now. Okay. Let me see. Next is receipt of income versus remittance of income. So what is that receipt and remittance? Receipt of income refers to the first occasion when the receipt gets the money under the control, under his control. So it is nothing but occasion where income is earned. Okay, that is only known as receipt of income. The recipient gets, the person who does the work. The recipient is nothing but the person who supplies the goods. For an example, here Mr. X supplies, right? So Mr. X will be the recipient. So receipt income refers to the first occasion when the recipient, Mr. X, gets the money under his control. So that is only known as receipt income. And remittance income is once amount is received as an income, any transaction or amount to another place does not result in receipt at the other places. Okay, receipts in receipts or at other places. So for an example, here what the once an amount is received as a income. Okay, if any amount is received as a income and any transmission of amount to another place, from one place to another place. So from Mr. X to Mr. Y, okay, to another place does not result in receipt. If any income, if it does not result in receipt, such income will be called remittance of income. That is what it means. So here Mr. X, okay, he receives the income, but he transmission the amount to Y because Y has supplied a goods to him. Okay, so X is liable to pay to Y. So that income is called remittance of income. Okay, so that is the difference between receipt of income and remittance of income. Next is income deemed to be received in India. What type of income is deemed to be received in India? What type of income is deemed to be received in India? So the following income shall be deemed to be received in India in the previous year, even in the absence of actual receipt. So contribution made by the employer to the recognized provident fund in excess of 12% of the salary of the employee is called as income deemed to be received in India. And next is interest credited to RPF of the employee, which is excess of 9.5%. So for an example, Mr. X, the company is Mr. X company is situated in USA. The work also he does in USA only, but income he receives here. Okay, and the company pays him a RPF, and the company pays him a provident fund. So such kind of amount, whatever is the excess of 12% or excess of 9.5%, that will be considered as an income deemed to be received in India only. Such income will be considered as deemed to be received in India only. And next is interest credited to RPF. Any interest credited to the RPF of the employee, which is not, so that also I have explained. Next is transfer of balance from unrecognized provident fund. That is also considered as an Indian income, and the contribution made by the central government or any other employee in the previous year, the account of employees under notified contribution pension referred in the section 80 CCD. For an example, we can say embassy offices. For an example, Indian embassy. Okay, Indian embassy office. Okay, so it is situated in USA. The employee is also there in USA, but Indian government is only paying a money to him, right? For the Indian embassy people, correct? Yes or no? Indian government only paying the money, salary to them, correct? So that time, the whatever transaction they do, it depends on the Indian. That such kind of income will be considered as a Indian income only. The income should be deemed to be received in India only. Okay, so that is what income deemed to be received in India. Okay, am I clear? Can we proceed?
Yes, sir.
Yes, sir.
Yes, sir.
Kindly make a note of this. Finished?
No, sir. 1 second, sir.
No, sir.
I think it is done, right? So let me explain. See here. So here we have the scope of income. What are the types of income we saw? And this is a residential status. So on what type of income who will be liable to pay the tax? That is what we are going to see in this chart. Using this chart only, the entire problem in the incidence of tax depends. Using this and this chart only. This chart helps us actually to find out what type of income is taxable to whom, for resident or for a not ordinary resident or for non-resident, whether it is taxable or not. That is what we are going to see here. Okay. So here scope of total income. So here as you know that there are residents are divided into two categories, that is resident and non-resident. So under resident only two categories, that is resident and ordinary resident, resident but not ordinary resident, and second category is non-resident. Correct. So now the income, scope of income, that is income received and deemed to be received in India during previous years. So it is a Indian income only, correct? Income received as well as deemed to be received in India, it is called Indian income. So it is taxable for everyone, no matter whether he is an ordinary resident or whether he is a not ordinary resident or whether he is a non-resident, no matter what he is. But it is taxable if it is an Indian income. Okay, if it is an Indian income, it is taxable to everyone. Okay, next, income accruing or arising or deeming to arise or arise in India during the previous year. So what do you mean by this? What do you mean by this? It is nothing but the income might receive in India, or it will be received in India, or the work might be done in India. So this is also called as Indian income. In simple term, Indian income is taxable to everyone. Indian income is taxable to everyone, no matter whether he is a resident or whether he is a not ordinary resident, whether he is a non-resident, no matter what it is. But if it is an Indian income, it is taxable to everyone. Okay, next, income accruing or arising outside India during the previous year. So what it is? Any income which is arising and which might arise outside India during the previous year. So such kind of transaction, what we can do, that is, this is called as partly income, partly Indian income, partly Indian income. So here, yes, it is taxable under resident and ordinary resident. Okay, resident under ordinary resident. Such income is not received or brought into India during the previous year. No matter whether certain income received or not, whatever it is, if he is earning in the previous year, that income will be taxable under for a resident. Okay. And the next is yes, but only if such income is derived from a business controlled in and professional setup in India. Otherwise, no. What it means? The entire business setup, it should be controlled in India. The entire business controls, it should be in India, but income should be earned outside India. So such kind of income is taxable for not ordinary resident. Income received in outside India, but the work should be done in India. The work should be controlled in India. Then only it is taxable to not ordinary resident. But if it is done outside, then it is not taxable. Okay, the business should be controlled in India. For an example, Microsoft, for an example, Microsoft, they have a business. Okay, they earn an income in USA, but they Infosys, for an example, we can put it in this way. Infosys, they earn an income in USA, and the work is also done outside India only, but the entire Infosys concept, it is controlled in India only, right? In India only, right? In that case, the income whatever earned by resident but not ordinary resident, he'll be liable to pay tax here. He is liable to pay tax here. The Infosys is supposed to pay tax if it is a resident and ordinary resident, not ordinary resident if it is. Okay, and next what it is? Next is non-resident. For a non-resident, if income is nowhere related to India or the work is nowhere related to India, then it is not taxable. So this is what the scope of income. So entire solution, it depends on this kind of problems only, nothing else. Entire problems will depends on the such kind of problems only. Okay, can I proceed? Finish copying it?
Yes, sir.
Yes, sir.
See around what type of income which is taxable to whom. That is a nature of income, that is Indian income is taxable to everyone, and foreign income, it is taxable for ordinary resident. And only two types of foreign incomes are taxable. Other foreign incomes are not taxable in India. What are the only two? So that there are only these two types of income is taxable for resident and not ordinary resident. What is that? Business income, which is controlled wholly or partly in India. So for not resident and not ordinary resident, if any income is earned outside India and the work is also done outside India, but if the business is controlled in India, then it is taxable. If it is not taxable. Okay, next is income from professional setup in India. If professional setup is in India, then it is not it is taxable under for resident and not ordinary resident. Okay, next, so non-resident, for non-resident is liable to pay tax only for Indian incomes, not for foreign income. For foreign incomes, it is not taxable. Okay, it is not taxable. Okay, any doubts in this? Any doubts? Any doubts here?
No, sir.
No. Can we proceed without wasting a time? Can we proceed to the problems? Anyone have any doubts? Shall I proceed? Put a chat message. Fine. Okay. I hope no doubts. Okay. So once again, I'll just give a brief of that is here the incidence of tax will be seeing only to see incidence of taxes. We'll see it is nothing but discuss about on what type of income which is taxable to whom. Okay, so how the incidence of tax will be seen based on his residential status and the scope of income what he earns and the place of income where he earns, that matters. Next, the incomes, we have to see the incomes are categorized into two types, that is Indian income and foreign income. Okay, and Indian income is taxable for all three citizens, all three assessees, that is resident and ordinary resident, resident and not ordinary resident, and non-resident. It is taxable for all three. And foreign income, it is taxable for non-resident and ordinary resident, and resident and not ordinary resident. If only in the two conditions it is taxable, apart from others it is not taxable. So what is that? If the business income is business income which is controlled wholly or partly in India, such kind of income is taxable here. And Indian income is from a professional setup, then also it is taxable in India. And non-resident he is liable to pay tax only for the Indian income, and foreign income no need to pay the tax. Okay. And above two income must be included in total income of resident and ordinary not ordinary resident, even if the accrues or arise outside India. No matter the income is arise or received outside India, no matter if the work is also outside and the income is also received outside, but it is taxable under resident and ordinary resident. And no other foreign income is taxable for in resident and not ordinary resident. Am I clear? So can we proceed? So first question, I want one person to go through this. I need one volunteer. Shall I pick one person or you will be volunteering me? Anyone? Yes, who's ready to solve this problem with me? Who's ready to volunteer me? Roll number 4242. Pavitra. You can unmute yourself.
Yes, sir.
I should only pick or else you will not do it, right? Okay. Kindly go through this problem. Read this problem.
Mr. X is resident and ordinary resident in India for the assessing year 2020-21. He gives the following information in respect of his income for the previous year 2019-20. Capital gain on sale of house situated in Pune. Sale consideration received in Nepal, rupees 10 lakhs. Salary received in Sri Lanka for rendering service in Tamil Nadu. Salary after standard deducting being rupees 1 crore 60,000. 1 crore 60 lakhs. No, 1 lakh 60,000.
1,60,000.
Interest received for government of India is paid to him in Sri Lanka. The money is utilized by the government outside India. Rupees 2 crore 56,000. 2 lakh 56,000. Royalty received from A Limited, a foreign company which is non-resident India. Outside India, royalty is paid for a manufacturing business situated outside India. Rupees 92 lakhs. Find out the taxable income for the accessing year 2020-21.
Okay. So here they have given the residential status straight away here. Correct. They have given the residential status of the assessee straight away here without any confusion. That is, what is Mr. X is a resident and ordinary resident in India for the for the assessment year, and he gives the following information in respect of income for the previous year. Whatever the income he earned in the previous year, that they have given. That what is the first income? Capital gain on sale of house situated in Pune and sale consideration received in Nepal. So tell me whether it is an Indian income or foreign income. First, we have to segregate whether it is an Indian income, whether it is a foreign income. Based on that only we have to proceed. Yeah, tell me whether it is an Indian income or foreign income.
Indian income, sir.
Why?
Because the capital gain on the sale of house situated in Pune. So Pune is inside India, no, sir.
Exactly. So it is called as Indian
income.
Very good. Okay. So even though the amount is received outside India, but the house is situated in India only, right? So that's the reason it is an Indian income. And the next, salary received in Sri Lanka, but for rendering a service in Tamil Nadu. Salary after standard deduction being rupees 1 crore 60 lakhs. So tell me whether it is an Indian income or foreign income.
Indian income.
Why?
Because service done in Tamil Nadu, sir. Only the income received in Sri Lanka.
The service, whatever they are doing, it is in Tamil Nadu. Where it is Tamil Nadu? In India only, right? Yes or no? So that's the reason. So it is called as a Indian income. Okay, Indian income. And the next item, what we have? Interest received from a government of India. It is paid to him in Sri Lanka. The money is utilized by outside utilized by the government outside India. Rupees 2 crore 56 lakhs. So tell me whether it is Indian income or not.
Foreign.
Huh? Yeah, tell me which is. It is an Indian income or foreign income?
Indian, sir.
Why it is Indian income?
Because received from government of India.
Very good. So that is the reason it is Indian income. Okay. So that's the reason. See here, the amount is received from government of India. Okay, no matter what it is, and he utilized outside India. That's also the spending. Also, it doesn't matter by whom the amount is received. Okay, if India is involved, then it is Indian income, no matter what it is. Okay. Next, royalty received from A Limited. A foreign company which is non-resident in India, outside India, royalty is paid for manufacturing business situated outside India, rupees 92 lakhs. So tell me whether it is Indian income or foreign income.
Foreign income, sir.
Foreign income.
Foreign income, sir.
It is foreign income. Why it is foreign income? Because the company is a non-resident. Non-resident is it is a non. It is not an Indian company, correct? And next is the work amount is also received outside India only. The work is also done in outside India only. Okay, so that's the reason it is foreign income. But once now if you finalize, right? Now we came to know that is Indian income, foreign income, and Indian income. Okay. Now once after this finding out, based on his residential status, whether it is taxable or not, we have to see. So now tell me, he is a resident and ordinary resident. So Indian income is taxable or not?
It is
Taxable.
taxable, sir.
Taxable.
Taxable,
Okay.
sir.
Next.
Taxable, sir.
Next.
Taxable.
Taxable, sir.
Taxable,
Next.
sir.
Non-taxable.
Huh? It is taxable or not taxable? Yeah, tell me whether it is taxable or not taxable.
Taxable, sir.
Taxable, sir.
Why
So
taxable?
because he is
Because
a
he is a
resident of
resident and ordinary resident.
ordinary
Yes,
resident of India,
yes.
so even if he earns from outside, he has to pay tax.
Very good. Exactly. If since he is a resident and ordinary resident, no matter whether the income is for Indian income or foreign income, he is liable to pay tax to the Indian government. Am I clear? So it is also taxable. So using this information, can we find out what is the total taxable income? We can find out, right? So finish copying this question.
No, sir. No, sir. 1 second.
Copy down fast. Copy down. Done. Is it done? Can we proceed? Okay, fine. The solution also you'll be getting the same question. Done? So next is we have to find out whether it is total taxable income or what is this total taxable income. So we found out what is the Indian income, which item is taxable, which is not taxable. Everything we found out, correct? Computation of total income for the assessment year. So what is the first income? It is a capital gain, correct? So it is the Indian income. So what is the amount? What is the amount?
10 lakhs, sir.
Okay. And the second income, it is also taxable, correct? So how
Yes, sir.
much? How much? What is the amount? What is the amount?
1,60,000.
1 lakh. 1 lakh or what?
16 lakhs, sir.
It is 16 lakhs, huh?
16 lakhs. Yes,
Okay.
sir. 16 lakhs.
16 lakhs. Next.
Yes.
Third.
Income received from Government of India, that is 25 lakhs.
25 lakhs.
5 lakhs 60,000.
25 lakhs.
60,000.
60,000. Okay. 25 lakhs 60,000. Okay. So next item. Since he is here, why we are taking? Because he is a resident and ordinary resident. So that's the reason we are taking directly. Okay. Next. Next, what is item?
Royalty received from A.
How much? Can you hear me?
Yes, sir. 92 lakhs, sir.
92
Lakhs.
lakhs. Okay. So total of this will be known as total income. Okay. So what is the total? 10 lakhs, 16 lakhs, 26, 26 plus 25, 41 lakh 60,000 plus 92, 1 crore 43 lakhs,
60,000.
60,000. Correct.
Yes, sir. Correct, sir.
So this will be this is how we have to compute the total income. You can copy down the solution. This come 1 crore. It's coming around 1 crore 61 lakh 66,000.
10 lakhs, sir. You have written 1 lakh there.
So what is the total income you are getting?
1 crore 43 lakhs 60,000.
60.
One more zero. Yes, sir.
Correct, right?
Correct, sir. Yes, sir.
Perfect. Copy down. This is how we have to do it. Okay. Done.
Yes, sir.
You can write short answers also, no problem. Instead of writing copy down here, you can write short answers. But when it comes to exams, that time you have to write it full. Okay. Without wasting, we'll go to the next question.
1 minute, sir.
Copy down. Next question. We'll go.
Yes, sir.
Yes.
Question.
So next, what is the next question? Compute the total income of Mr. X, assuming him as an ordinary resident, not ordinary resident, and non-resident for the assessment year 2021. Okay. So they have given the question. So we have to assume it that if he is an ordinary resident, this income is taxable at what? If he is a not ordinary resident, how much is taxable for not ordinary resident? That is what we have to do it here. Okay. That only we have to do it. So now you tell me, your first and foremost thing we have to find out is residential status. But in this question, what they have given, they are assumed us. They are asking us to assume it whether if he is a non-resident, such in that income is taxable under what? Okay, that we have to, on the assumption we have to proceed. So now tell me, here interest on first item. This is the first item. So interest on UK development bonds. 50% of interest received in India. So now tell me, is it Indian income or foreign income?
Foreign income, sir.
How?
Because 51% on
It's a foreign income or Indian income? Or
Indian
it is
income.
partly Indian income?
It's foreign because it's interest
Partly
interest
Indian
on
income, sir.
Partly
Partly.
Indian income.
It is partly Indian.
Partly Indian income.
So what it is India? How much is Indian income? In this, 5,000 will be Indian income. That is 50%. It is received in India only, right? Yes or no? Am I clear?
Yes, sir.
Yes, sir.
And remaining 50,000 will be, sorry, 5,000 will be, this will be Indian income, and this will be foreign income. So this 5,000 will be taxable for all the 5 residents, no matter whether he is an ordinary resident, whether he is a not ordinary resident, whether he is a non-resident, no matter. If it is an Indian income, is taxable for all 3. Okay, am I clear? And this is taxable for whom? Foreign income. Yes, tell me. Foreign income is taxable for whom?
Resident, non-resident,
Resident.
ordinary resident.
And only?
Resident, not ordinary resident.
No, it is taxable only for
2 people.
no, only one person. Only one person. Who is that? That is resident and ordinary resident. That's all. Here it is very clear. In this table, it says clearly, right? Even foreign income is taxable for whom? Resident and ordinary resident. When it comes to 2 transaction only, it is taxable for resident and not ordinary resident. What it is? Business income which is controlled. It is related to business income. Does it related to business? No, it is related to a dividend from your investment you are earning. Correct? That's the reason it is not taxable now. Okay, not taxable for not ordinary resident also. Am I clear? Am I clear, madam? Shall I proceed? Yes or no?
yes, sir.
Respond something.
Yes, sir. Yes, sir.
Next, income from business in Chennai, managed from London, 50% is received in India. So now you tell me whether, sorry, second we didn't finish, right? Interest on
Yes, sir.
debentures in Indian company. Interest on debentures received in Indian company. So it is an Indian income or foreign income?
Indian
Amount
income.
It is Indian income because it is from the Indian company only, right? Yes or no? So that's the reason it is Indian company, Indian income, and this income is taxable for all three. For all the three types of resident, it is taxable. Okay, next, you tell me. Income from business in Chennai and managed from London. So 50% is received in India. So tell me whether it is Indian income or not.
Foreign
Indian
income.
income.
It is Indian income. Why? Because it is received from a business in Chennai only, right? Yes or no? No,
But it's
even
controlled in London also.
no, controlled is London, but income is received in India only, right? Here, when you see the income, first you have to see where the income is earned. Here in this case, where the income is earned in India only, right? If it is earned in India, then it is Indian income. No matter the work is outside, also no problem. But it is a Indian income only. Okay. Only for that foreign income, that category, that rule is applicable. Where the work is also outside, okay, where the work is also outside, income is also outside, but managed in India, controlled in India, that time only it is taxable for not ordinary resident. Okay, but in this case, the income is from a business in Chennai, Chennai where it is in India only, right? So it is a Indian income only. It is a Indian income. Am I clear? Any doubts, madam? You understood?
Yes, sir. Yes, sir.
Next, profit on sale of share of Indian company. Profit on
Indian
sale
income.
it is a Indian income because it is from the sale of share of company from India, from Indian company only, right? So that's the reason it is a Indian income. So Indian income is taxable for whom? For all the types of residents. Next, dividend from British company
Foreign income.
received. It is a foreign income. So it is taxable for whom? It is taxable to whom?
Non-resident.
Huh?
Non-resident.
For non-resident, it is taxable. What it says here, it's a foreign income. It is taxable for whom? Resident and ordinary resident. And resident and not ordinary resident, it is not taxable. So it is taxable only in two conditions. That is, if the business is controlled or partly managed in India, then only it is taxable. So here it is dividend. It is nowhere related to India. Correct. So nowhere related to business. Okay. Next is non-resident. It is not taxable. So which means foreign income is taxable to whom? Yeah, tell me, sir.
Resident.
of India.
Resident and
Ordinary
ordinary resident. You have to tell clearly resident and ordinary resident. Next, profit on sale of plant in Germany. Now you tell me, it is an Indian income or foreign income? Plant, okay, which is situated in Germany. Okay, they received a profit and 50% is received in India.
Partially Indian income.
Partially Indian.
It is partly Indian income. So how much is taxable for everyone? 20,000 will be taxable for. So 20,000 will be considered as a foreign income and 20,000 will be considered as a Indian income. Why? Because 50% profit is received in India, right? So that's the reason. Okay, am I clear? Am I clear? So Indian income is taxable for all the three resident and foreign income is taxable for only one type of resident. Okay, and next.
Sir, but in this case, we'll be ultimately taxing for 40,000, no, sir?
For whom?
For ordinary resident.
Ultimately, for ordinary resident, it is 40,000 because since he is an ordinary resident, he is liable to pay tax for no matter whether it is foreign income or Indian income, is liable to pay tax. Okay. Okay. Am I clear, ma?
Yes, sir. Yes, sir.
Okay. Next, business income in Germany, which is controlled from Delhi. 40% is 40,000 received in India. Now you tell me how we have to do for this. It's a business income in Germany, which is controlled from Delhi, and 40,000 received in India. So now tell me what type of income it is.
Indian income, sir.
Partial Indian.
Indian
Partial.
income, sir.
Indian income.
It's fully Indian income?
Yes, sir.
No,
Partially Indian
No,
income. sir.
partially Indian income.
it is partially Indian
Partially
income.
Indian
So how
income.
it is? Because only control, that's all. The work also outside. Okay, income is also outside. Correct. Both is done outside. Both is in this category. Both, if the work also outside, income is also outside, that time it is foreign income. But in that 40,000 is received in India, right? So which means out of 70,000, 40,000 will be Indian income and 30,000 will be foreign income. Am I clear? Am I clear? And in this case, this foreign income is taxable for whom? Yeah, tell me. Foreign income is tax. Yeah.
For
Ordinary
resident and ordinary resident and resident but not ordinary
Not
resident.
ordinary resident.
Why? Because the business is controlled in
Controlled
India.
in
The point they have given here, right? So that's the reason. Even if it is a foreign income, since the business is controlled in India, so that's the reason he is liable to pay tax. So 70,000 is applicable for resident and ordinary resident, and resident but not ordinary resident. When it comes to non-resident, he is liable to pay tax only for 40,000. Okay, am I clear? Am I clear or not?
Yes, sir.
Okay. So next point, what is this?
Yes, sir, yes, sir.
Profit from business in Delhi but managed entirely from London. So tell me.
Indian income.
It is a Indian income. Very good. Why? Because the business is in profit, whatever they earned, it's in India only, right? That's the reason it is an Indian income. Next is income from house in London, deposited Indian bank at London, brought to India. So now tell me, this is one of the best complicated day of question.
Foreign
It is?
income. Foreign income.
Why it is foreign income, madam?
Because it's income from the house which is in London, and it is even deposited in London. So
That's the reason. Okay. So that's the reason it is a foreign income. Some of you might have a confusion that, sir, it is Indian bank only. No, sir. Why? But the place for the Indian bank also, it is London only, right? Yes or no? So that's the reason it is a foreign income. No matter whether he brought to India, that and all doesn't matter. But if he is earning outside India, the work is also outside. So what it is? It is a foreign income only. And next question, what it is? Yes, royalty or fees for technical service rendered in India. So tell me whether it is Indian income or foreign income. And the amount is received in London.
Indian income.
Indian income.
It's a Indian
income.
It's a Indian income. So using this, can you compute it? Can you compute what is the total income if he is a resident, if he is a non-resident, what will be? Just can you compute it? Try doing it. So Vipul sir, how many minutes we have, sir?
3 more
3
minutes.
minutes.
3 more, huh?
Yeah.
So I'll stop share. I think you have copied down the question, no?
No, sir,
Students?
no, sir. No, sir.
You didn't copy it. Shall I rub this?
Sir, all the three, are we supposed to do it separately, or can we
Yes,
do it in
separate.
one table?
One
Or
table. One table, you give us segregation of columns. That is, for an example, resident and ordinary resident, resident and not ordinary resident. Like that, you can segregate. Okay.
Yes. Sir.
Okay, like that. You can do it. And the next class, I'll be expecting answer from you end, from your end.
Sir, eighth point, sir, profit from a business in Delhi but managed entirely from London. It's Indian income, but it is available for whom, sir? Resident or not ordinary
No,
resident?
because it is a Indian income only, right?
Oh.
Indian income is liable to pay tax for everyone. All the assessees is liable to pay the tax.
Yes, sir, yes, sir, yes, sir. All the three, sir.
Yes.
When the income is received in India,
Hmm.
all the three have to pay the tax. If
Yes.
the income is received in foreign but managed in India,
Hmm.
so who has to pay the tax, sir?
If the business work also should be done in manage, leave about manage. First, you have to see the work where the work has done.
Oh.
So, for an example, work in India. Okay, work is done in India. Okay, income is earned in outside India. Okay, so that time it is called Indian income only. Okay, first. Next, suppose the work is both. For an example, next work is also outside India only. The work whatever they have done. So that time it will be considered as a foreign income. Okay, it will be considered as a foreign income. For an example, see here, business income in Germany, which is controlled in India. Here the work and earning, everything is controlled in India. Even though it is controlled in India, but it is a foreign income only. Okay, and but it is taxable to two types of residents, that is ordinary resident as well as not ordinary residents.
Resident.
Okay.
Yes, sir, understood, sir. Thank you, sir.
So what about the ninth point, sir?
Ninth point, income from house in London, deposited in London and deposited in Indian bank at London, correct? So where the work is done, the house, where the house is situated, outside India, right? And amount is also where they are receiving, outside India only, right? Correct. So that's the reason it is a foreign income, both the transaction. Okay, any other doubts? Okay, time up it is. Actually, anyways, and tomorrow is a Teachers' Day, so we'll be missing you people. The celebrations, whatever we used to do in the college, we will be missing you people this time.
Happy Teachers Day, sir.
Thank you so
Happy
much.
Teachers Day, sir, in advance.
Happy Teachers Day, sir.
Teachers Day, sir.
Okay, let me finish my.
Happy Teachers Day, sir.
Let me finish what I used to say.
Happy Teachers Day in advance.
Okay.
Happy Teachers Day, sir.
Happy Teachers Day, sir.
Happy Teachers Day, sir.
I'll end the meeting.